In Sydney, Nebraska, a thriving rural town watched its biggest employer collapse, wiping out home values and jobs overnight. Across the country, a star tech CEO was ousted from his own billion-dollar healthcare company in less than 2 weeks. In South Korea, a corporate merger triggered a bribery scandal that impeached a sitting president. And off the coast of West Africa, an Argentine military warship was suddenly seized by local authorities, trapping 200 sailors. These 4 distant, high-stakes events seem completely unrelated, but they were all engineered by a single individual. That man is Paul Singer, the multi-billionaire founder of Elliott Management. His anonymity is a strategic choice, keeping his role in these crises out of the headlines and far from public scrutiny. Traditional investing relies on buying an asset and waiting for its value to grow. Singer ignores growth. He targets distress, scooping up the debt of struggling companies or bankrupt nations for pennies, and then demanding they pay him back in full. His primary weapon is lawfare. Singer views the court system as a financial battlefield, finding obscure legal loopholes and deploying endless lawsuits to trap his targets until they cave to his demands. His operations rely on 3 distinct strategies: the corporate siege, the sovereign trap, and the political shield. The corporate raid is executed through activist investing. While most shareholders wait for stock prices to rise, Singer uses his position to install his own board members and force hostile, rapid shifts in company direction. When Elliott Management bought an 11% stake in the outdoor retailer Cabela's, they did so to force a massive sale, prioritizing a quick exit over the company's long-term stability in its hometown of Sydney, Nebraska. Cabela's was eventually sold to Bass Pro Shops for $5.5 billion. Within a week of the announcement, Singer cashed out for a $90 million profit. In Sydney, the headquarters shut down, wiping out thousands of jobs and triggering a wave of local foreclosures. If executives resist these demands, Singer escalates. He has a history of hiring private investigators and former intelligence operatives to dig through the personal lives of his opponents, gathering leverage that rarely stays private for long. Jonathan Bush, the founder of Athena Health, faced a devastating series of leaks regarding a 14-year-old divorce dispute and private text messages after resisting Elliott's push to sell. Bush was out of the company in 11 days, and Elliott secured a multi-billion-dollar sale. In this model, personal ruin and the collapse of local economies are not accidents, they are calculated negotiation tactics. Singer applied similar pressure to the bankruptcies of major manufacturers. When Owens Corning faced billions in liabilities to workers dying from asbestos exposure, Singer bought the company's bank debt and entered the courtroom. He funded research and public relations efforts that portrayed these victims as fakes, successfully lobbying to cap their payouts. By reducing the money meant for the sick, Singer ensured his own returns on the debt would climb. The vulture trap operates on a staggering imbalance. A tiny initial purchase of distressed debt from a nation in the middle of a civil war or epidemic is used as the basis for a lawsuit demanding the full face value of that debt, plus decades of interest and legal fees. By winning these judgments in American courts, Singer effectively locks the target nation out of international markets, preventing them from stabilizing their economy until his payout is secured. This strategy reached its peak in Argentina. Following its 2001 default, while most creditors accepted a 70% loss to help the country recover, Singer bought $50 million of cheap debt and spent 14 years suing for the full amount. His lawyers eventually obtained a court order in Ghana to seize an Argentine naval vessel, holding the ship and its 200 sailors in port as collateral for a multi-billion-dollar debt. Argentina eventually paid $2.4 billion to settle the case. It was a clear demonstration that Singer views international law and sovereign immunity as tools for profit rather than boundaries of power. The question remains how a private investor can legally hold entire nations and public companies in a state of siege. Buying debt specifically to sue for the full amount was once an illegal practice called champerty. When legal challenges threatened his business, Singer focused his influence on New York state lawmakers, successfully pushing through changes that legalized his specific method of litigation. Singer's network funnels capital into 2 distinct pillars. The first, a web of think tanks like the Manhattan Institute, manufactures the legal and policy frameworks he needs. The second, a network of politicians, works to pass the very laws his think tanks recommend. This effectively closes the circuit. When proposals for wealth taxes or stricter financial regulations arise, the think tanks provide the arguments to kill them in court, while his political donations keep critical press stories from gaining traction. These donations are the defensive armor of his business, ensuring the rules of the global economy are continuously tailored to protect his operations. Singer's success is built on an absolute lack of limits. He operates with the understanding that ethics are secondary to high returns, and that the complete destruction of a company or a community is simply a byproduct of a successful play. To the ultra-wealthy, this makes him an uncompromising protector of capital. Investors flock to Elliott Management because they know Singer will utilize tactics that traditional firms find too extreme or too damaging to their reputations. But those returns are generated from the fallout of intercepted aid, shuttered factories, and the erosion of local economies. For every successful settlement, there is a community or a workforce left to manage the consequences. Paul Singer is the blueprint for a model where private capital can leverage the legal system to reshape policy and economies to its own specifications. Without transparency, these invisible financial empires will continue to dictate global stability far beyond the reach of public oversight.